Welcome to The Investor, a podcast where I, Joel Palafinkel, your host, dives deep into the minds of the world's most influential institutional investors. In each episode, we sit down with an investor to hear about their journeys and how global markets are driving capital allocation. So join us on this journey as we explore these insights. All right, so super excited. I'm here on the Investor Podcast with Danny Qiao. He is with Connecticut Innovations, has been on the investment team. I've had Connecticut Innovations on our podcast before, and they're one of the biggest investment arms of Connecticut, and they've done a lot of investments, mainly into direct deals. They've done some fund investing as well. Got to catch up with Danny at a cocktail hour at New York Tech Week, and this is how fast the turnaround is. Now he's on the podcast here to give us a quick update. So Danny, welcome to the show, and we have some common connections too. You actually know people within the Sutton platform as well. So excited to have this full circle moment and have you come on, and excited to learn from you as well.
Yeah, excited to be on. Thank you for having me, Joel. I was very stirred up in this. We ran into each other and found out that, oh, you're the guy that ran Sutton Capital. Because I've heard the name across my investing career. And as you said, there's quite a few people that are in my network and in your network as well. So very, very, very excited to be on. And also very excited to chat about Connecticut Innovations. Happy just to kick it off and tell you about CI and what we do. Get some details out there because we are a very unique organization. There are probably about 9, 10 of us across the US, but essentially we operate as the venture capital arm of the state of Connecticut. We are a quasi-state entity. We are created through state legislature in the late 80s, I believe 1989.
Mm-hmm. Sure.
And the entire formation and the thesis of what we do as a fund is to invest in the state's innovation economy. So we are solely backed by the state of Connecticut. It is an evergreen model. The original money was, I think, believe 80 million, and we've been able to recycle that capital through IPOs, M&A exits over time, and grow our assets under management to about 500 million today. So we currently have about 250 active portfolio companies. We deploy about 40, 50 million each year into about 40 or so companies, half of which are usually new. I think PitchBook had us as the second most active investor in the Northeast for 2025, or I believe the last 12 months. So we are very, very active, very, very interested. We're stage industry agnostic. We have a strong healthcare investment team, a bunch of people much smarter than me. They all have PhDs. Then we have a general tech, all other team where we invest in things ranging from CPG to B2B SaaS to climate tech, and everything that falls under that realm. So we are the caveat though, the catch is that we are only investing in companies that either have a current Connecticut presence or plan Connecticut presence. So what that means typically is we love to see companies that either have an executive living and working in state and building a team around him or her in state as well. So the goal and ultimate mission of our money is to grow headcount in the state of Connecticut. So that's the thesis. That's what we do. We've done that exceptionally well over our 35-year history. I believe we have well over just the last fiscal year, which runs from June 30th to July 1st for us. So it just closed. We created about, I believe, 500 new jobs in the state through 40 investments or so.
Wow. That's amazing. Well, why don't we take a step back and learn a little more about you, Danny? So learning about your background, your career, what did you study? And, as we all know, and, this is why we exist, there really isn't a clear pathway to get into asset management, whether it's working at a hedge fund, private equity, venture. There isn't like a degree in hedge fund management, right? So tell me a little bit about your journey getting into venture and maybe some of the skills that you built, or maybe, the techniques that you learned along the way to kind of stand out in and land this, first pathway into venture. And then we can talk
Yeah.
about, I think later on we can talk about what it takes to kind of continue to be a leader in this space and, refine the craft, right? Because there's a lot of trends that indicate that that there's changes in the industry, right? There's new vehicles that are popping up and new ways to think about venture. But let's start from the beginning and learn about your career and your story.
Yeah. I wish we had more time because I can
Yeah,
go on for hours about it. But
yeah. We
I've
could we could
had
go on until 4 p.m. and get into cocktails like we did last time.
yeah, that'll be great. Too bad it's not in person. But I've had a very non-traditional path into venture. I was a guy that hopped around and did pretty much everything before finally figuring out very late in my life what I actually
Hmm.
wanted to do. So not to take it too far back, but my undergrad experiences were actually all in government, public service. I thought I was going to be a government bureaucrat when I graduated college. So I entered college with that mindset, thinking that I was going to be a public servant. So all my internships in
Hmm.
college were in public service. I interned at nonprofits.
Sure.
I interned at a UN agency. My last internship was actually at the White House under Obama with the White House Initiative on Asian Americans and Pacific Islanders. It was actually from that experience that I realized that the world of public service was not the right fit for me. So
Hmm.
I entered my senior year a little bit early to have a quarter life crisis, but I did have a quarter life crisis, thinking about what the hell I was going to do with my life. I see all my
Yeah.
friends and peers at this Ivy League university going up for the world of business and locking down these amazing jobs. And I was freaking out. So I applied to everything that fall semester senior year. And I was very, very fortunate to get my first offer in strategy business consulting with Accenture. So it was a crazy story how I got the offer. But when I got that offer, just give you a range of all the things I was considering. I was in process for Teach for America. I was looking at paralegal firms and consulting. No thoughts about the world of finance whatsoever.
Hmm.
So I was very, very lucky. I got the consulting gig, and that was my first foray into the world of business. I had
Sure.
started that job not knowing what P&L was. Just to give you, some
Yeah.
perspective on just how new I was to the world of business. So
But this was in the consulting role, right? So tell me
it was.
about were you in the private equity? Because a lot of consulting roles sometimes, what I think the good ones that help people kind of break into VC, there's a lot of great opportunities to do private equity or VC consulting where you're doing a lot of the diligence, or you're putting together, financial models or actually doing the ICs as a service for some of the funds. And I know Tiger Global did that a lot, right? They
Hmm.
they hire like Bain Capital to do
Yeah.
a lot of their deals at scale, right? Like within 2 days, they'd have an investment committee. So is that kind of some of the focus areas that you had in consulting that helped,
Not
or was
not
it
at
okay?
all. Not at all. I
Yeah,
wish I did. Would have made
yeah,
my career a lot shorter,
a little
but
easier, right?
a little bit easier. I actually
Yeah.
worked with general corporate strategy consulting. So my projects I had my year and a half in consulting were
Hmm.
with agribusiness, with a credit card company, and health insurer out in Detroit. So those were all my projects. None of them were
Hmm.
involving the world VC or PE whatsoever. Very three different industries, very
Hmm.
three different projects. And I actually lateraled shortly after
Sure.
my time in consulting to investment
Hmm.
banking. That was
Got it.
when I switched to BNP Paribas because I realized after a year and a half consulting that loved the work, but B, hated the travel. I was doing the
Hmm.
whole Monday to Thursday
Yeah.
thing. Was for my young mind a little bit too much. So I wanted to stay in one place and explore. I realized I loved the financial analysis skill set, so I wanted to hone that a little bit more. So I was
Yeah.
very fortunate once again to land a career in investment banking with a French bank called BNP Paribas, originally in the FIG group. So I was covering banks, asset managers, official institutions, and insurers. Did that for about a year and a half before I switched again within BNP to sponsors coverage, where that's when I finally got the exposure to the world of private equity.
Yeah.
I entered that role as like I think a second year associate, stayed
Hmm.
on second year analyst, stayed on till first year associate. And it was a fantastic experience. Love my MD and group there actually. I was working on structured financings for the largest private equity players in the world, Blackstone, Carlyle, KKR, you name it. I was working with them. not so much on the LBO, so it's much
Hmm.
more on all sorts of structured financing arrangements, given that BNP was largely a balance sheet bank.
Sure.
Um, so, but what ended up happening was I entered that role thinking I was going to go private equity. After working in private equity, I had a coming to God moment where I realized, oh, this world is not the right fit for me. It wasn't what I enjoyed about kind of like my calling back to the roots of being public service, where
Hmm.
uh, trying to add value to society, add value to my own personal development, service, that kind of mindset. So again, I had a quarter life crisis, and that's when I figured I should just do my MBA, figure myself out, take some time to myself, and explore some new career paths. So this was also right when COVID hit. So it was
Yeah.
a crazy time to go into grad school. So I entered the MBA from 2020 to 2022,
Hmm.
basically straight through COVID.
Yeah.
Don't I do not recommend going to grad school during a pandemic, especially one that's focused on networking and meeting new people. But the silver lining for me was I entered the MBA program knowing that I wanted to pursue something in entrepreneurship adventure. Figured ultimately these two realms were where I would find most value to alignment with my values, being it being something where I could add a lot of service,
Hmm.
something I could get my hands dirty and involved in, and also worlds where I can essentially reap the fruits of my labor. So
Yeah.
that was my silver lining. COVID was the silver lining I got from COVID doing grad
Hmm.
school was that I was just
Sure.
able to work and build up a narrative from my 2 year experience that ultimately landed my career adventure. So
Yeah.
my fall semester, first year, I interned with three startups for the time. Spring semester, first year, I did 30 hours a week for a venture studio. That helped into a narrative where I was able to land a summer internship with Green Spring Associates, now bought by Stepstone Group.
Stepstone. Yep.
Yep, yep. And then from there, I was able to land my internships with Sweater Ventures, which was ultimately where I ended up in venture when I graduated. But that was also a crazy experience. Joined Sweater straight out of the MBA, did that for about a year and a half. It was an amazing
Hmm.
opportunity. I was looking to democratize venture capital access. I was able to accelerate my career, get some direct exposure to deals, push deals through, manage and develop like a whole investing kind of perspective independently of the typical apprenticeship model.
Hmm.
But Sweater was a startup. Things pivoted, things changed, and I unfortunately had to leave the company and move back to the East Coast. Um, and that's where I rejoined CI. So I took a class taught by the CEO of Connecticut Innovations during my second year MBA.
Hmm.
And I did well enough in the class that when an opening came up, I emailed him and said, hey, can I throw my hat in the ring? And he said, sure. And did well enough in the interviews that here I am today. So it's been over a year and 2 months since I've joined.
Yeah. That's amazing. So, just taking a step back, what are some of the soft skills and hard skills that helped you pivot from consulting to investment banking? Because that could also just be essentially a hard pivot as well. So, walk us through some advice you would give to people that are looking to kind of make that shift, because that's a common shift to people that switch from consulting to like, look, I think the next thing I want to do is banking, because heavy quant, technical skills.
Yeah, yeah. I mean that. I mean, I was like I said, the guy that didn't know what P&L was, and somehow a year and a half later
Hmm.
was only looking through P&Ls,
Yeah,
financial,
sure.
institutional P&Ls,
Yeah.
and investment bank. Right? That's a
Hmm.
crazy switch. Um, I give a lot of that credit to my first project, which
Hmm.
was essentially a zero-based budgeting project. And I was tasked with managing and rebuilding a P&L for $1 billion business line of a Fortune 50 business.
Hmm.
Um, so that experience was trial by fire.
Yeah.
I the most the advice and takeaway from that is you got learning on the job, trial by fire, where
Hmm.
you have to perform, where you have to present and be up to snuff with the rest of your colleagues when it comes to putting together presentations and building up the trust between the project leaders and
Hmm.
the client. there's no better place to kind of really feel the pressure and feel the need. Otherwise, either you fail and project fails or client drops to everyone, and then
Yeah.
that's, that's a lot of pressure. But for me
Hmm.
personally, I thrive under those environments, and that kind of team was also a strong credit.
Yeah.
I would not have done that transition if I didn't have honestly super patient peers that were willing to walk me through these simple basic things. Take the time to like out the busy day after client meetings to just, hey, like this is what you gotta do. Look through 10 Qs, 10 Ks,
Hmm.
whatever. Do some research. Um, and that's what I did, trial by fire and really patient colleagues.
Yeah. What are some of the, when you look at the P&L, what are some of the things that you would advise people as they're kind of building those hard skills, looking at P&L statements? I mean, obviously there's, you know, a couple other financial statements that make up the whole system of financial statements, right? But when you're analyzing companies, what are things that you look for? I would say, especially in terms of how companies are spending money, what's kind of a red flag when you're analyzing these companies? And since you guys are, from my understanding, a generalist, what are some trends that you look at when it comes to maybe a deep tech company versus a consumer company, as you're analyzing those?
Yeah. So one common thread from all my experiences that
Hmm.
definitely relate and influence how I review companies today
Hmm.
is how companies manage their spend.
Yeah.
Because I mostly cover consumer goods, consumer tech
Hmm.
here at CI and also at my last fund, Sweater. And revenue is one of those things where most companies there aren't many growth levers for
Hmm.
revenue, ultimately, for mature businesses. So how they manage their expense, especially marketing in the world of CPG and consumer,
Yeah.
is a big one, where there's so many bench lines out there, 30% of revenue or whatever is the kind of benchmark that is thrown around sometimes.
Hmm.
So how that kind of trickles down to your customer acquisition, how that trickles down to your organic growth, all that kind of generates the insights on the organic demand of whatever it is you're selling. So that to me is a big indicator to how like creative management teams can be in getting their products out there, or how kind of laser focused they are in making sure that they are only spending dollars that should be spent. um,
Yeah.
and this is something that, because ultimately that's the biggest lever for
Hmm.
management teams is for growth. I saw that in private equity where when buyouts happen, right? Expense management is the first thing that is done when companies and PE firms are looking to cut costs. So
Yeah.
how teams expertly do that is a big telltale sign to how kind of long term vision thinking they might be.
Sure. How can people develop an investment thesis when they look at, venture capital deals? Because how have you kind of framed your thesis on different sectors?
So it's an interesting question because as a generalist, we are by nature looking at everything.
Hmm.
Um, and we sometimes lead, but more often than not, we follow. So what
Hmm.
that typically means is we follow the theses of specialist funds sometimes, where we know we're not the experts in the space. So
Hmm.
we rely on expertise and skill sets, the knowledge base of specialized GPs that know what they're doing. And we're kind
Yeah.
of like leaning in on their diligence and leaning in on their bet and just
Hmm.
tagging along. That's a little bit of our risk parameters as a specialist state fund, especially. So when it
Yeah.
comes to theses and how we evaluate opportunities,
Hmm.
our major filter and lens is their Connecticut presence, first and foremost.
Yeah.
Um, and then for after that, it really depends on our area of comfort. So for CPG things, yeah, we can lean in a little bit more, be more comfortable given my own personal experiences.
Hmm.
But for like a deep tech area, let's say it's like semiconductors or obviously AI now. Does anyone really specialize in AI? I don't know, but here at CI,
Hmm.
we don't have any super technical people with that kind of AI experience. So as a
Yeah.
result, a lot of times we wait for um, a fund or a GP with that experience to
Hmm.
jump in first before we take a look. So it's the easy way out, to be honest. It's not, we're not, we're not sending out term sheets. We're not defining um, a thesis because ultimately at the end of the day, we don't have to. We're a slow, steady fund. We won't be here. We've been here for 35 years. We'll probably be here
Yeah.
for another 135 for however long the state of Connecticut exists.
Sure. When it came to banking, what were some of the skills that helped you transition into venture? And then, I want to preamble that with what was going on in your mind when you wanted to really figure out what you really wanted to do? Walk me through that because I think you touched on that earlier when you did your intro. And you're like, look, it took, I was going through a quarter life crisis, or I'm trying to figure out what I really want to do, right? And it's funny because I worked for the government as well. I worked for the DoD, so spent some time there. So, what helped you shape what you did not want to do and what you really like doing, and maybe talk about some of those skills that helped you in your banking role getting into venture.
Yeah, yeah. So I think every experience I've had was something that I thought I wanted to do because my
Hmm.
peers were doing it until I
Interesting.
actually did it.
Got it.
I would say I was a little bit late in that frontal lobe development in determining what my ikigai should be, or
Sure.
kind of, what my raison d'etre should be,
Hmm.
in
Yeah.
terms of professional and personal. So, a little bit, I went to banking ultimately, to be transparent.
Hmm.
It was a little bit for less travel and because I saw the financial returns that my peers were making at
Hmm.
21, 22, 23. Um, and I kind of wanted that. So, I did like the financial analysis skill set. I had a dabble in it in that first project in consulting.
Yeah.
My two other projects were a little bit light in financial analysis.
Hmm.
I thought it would be a strong, hard skill that will carry me throughout my career. And to be honest,
Hmm.
it frankly has. It has been a really strong skill set that is something I can rely and lean on even today. But it wasn't something I didn't grow up thinking I wanted to be an investment banker.
Hmm.
And it was something I thoroughly enjoyed. I don't regret the experience whatsoever. I had great colleagues, great peers, great exposure to industries that
Hmm.
um, ultimately really do influence kind of my generalist, broad perspectives as a venture investor. I
Yeah.
was I see so many different industries, see so many different projects. I every day kind of draw back correlations to all the different things I saw throughout my
Hmm.
different kind of industry dabbles I've had in those early years. So for investment banking, really, there's there's so many things that I took away from my 3 years in IB. Um, but the biggest ones I would say is just how much relationship building really matters, and like kind of the soft skills around relationship management, the soft skills around presentation, the soft skills around coalition building. There's so many committees you have to go through, so many the papers and the modeling was probably the easiest part. The hardest
Hmm.
part was just building consensus and watching your MDs sell to clients and understanding, oh, if you want to rise up a bank, you gotta learn how to sell. Well, yeah, if you want to rise up to any career, ultimately you have to learn how to sell. Well, either yourself if you're the capital or
Hmm.
the things behind you. So those were massively important things that I kind of draw influence my career in venture because
Hmm.
capital is commodity. So either you're selling what is behind you, what you're leaning on, or you're selling yourself as an individual.
Sure. Can you double click a little more in terms of what the day in the life of like an investment banker was like? I mean, I'm assuming you're just wearing multiple different hats depending on the phase of the deal that you're in, right? So obviously there's a roadshow and you're putting together, collateral, whether you're on the sell side or you're doing buy side work. But walk us through kind of your specific role in the banking industry and kind of the day-to-day stuff that you had to do.
Yeah, yeah. So I would say every bank is different. Every bank is different how they approach go to market and selling.
Hmm.
So for BNP, especially in FIG, what we did was we split between coverage and product. Sometimes it's horizontal thing, sometimes one and the same. But for us, it was basically coverage acted as origination, and then product acted as execution. So as a result, we had a left fin team, we had a global markets team, we had facility financing teams. So what we did in coverage was a lot of pitching, was a lot of uh, knowing the right clients, knowing the right stakeholders on client side, getting together the right presentations for these guys, pitching and selling BNP either to be whatever role it needed to be in deals, whether that was uh, a left lead, which to be honest wasn't often for especially with financial private equity firms,
Hmm.
or one-off structured bespoke arrangements with like maybe the credit team of Blackstone or the credit team of Carlyle, and then we pass off the kind of execution to the global markets team, but it would be a tag along. We will work with the products team, make sure we have the right information, the right kind of proposal put together, and then throw it out there and go out and talk to numerous clients every single day.
Yeah. And who would source these clients? Did you guys, I guess that would be part of the sales team, I guess the sales and trading team. They're kind of pitching these deals. There was a show called Industry. I don't know if you ever saw that,
Hmm.
but that was a
Yeah.
pretty awesome show. It talked about like the whole sales and trading floor in especially in London. But I mean, it's pretty much the same setup here. But just for the audience, would love to just get a little more color. So in your situation, obviously you're putting together the decks, probably working late nights, putting together all the financials and the collateral and the decks and stuff. And then I guess you weren't responsible to actually set those meetings and find the clients, right? You were just kind of coming in to present and hopefully close the clients.
Well, it's actually be a mix. Well, at least how
Okay.
it was at BNP.
Yeah.
So every MD, whether they were product or coverage, had their own relationship with clients as an institution. So,
Hmm.
like BNP's relationship with Carlyle, we had tie-ins with multiple arms, with the credit arm, the real assets team,
Hmm.
obviously the buyout team. So every kind of team within team, there were ultimately those kind of intra firm kind of relationship dynamics. But overall, as an institution, what would happen was our coverage team would have institutional relationship. So my MD would have the main kind of relationship with the head of whoever may be running Carla at the time. Might have been Glenn, uh, um, Youngkin at the time, him and the other co-CEO,
Hmm.
I forgot his name. So it would be like my MD working mostly with those guys for higher level
Yeah.
stuff. We'll understand
Yeah.
their priorities, their needs, and then we would then through those the what needed to happen, we'll work our way down to the specific teams within Carlisle that needed the exact products that the bank was selling. And then by that point, we will then either pull in the pre-existing relationship at the product side or the pre-existing relationship at the product side will tell us, hey, we want to now sell from real assets. We want to sell this financing structure to the credit team. That would be on us to then, broker that introduction and
Yeah.
relationship. So
So it's kind of you're kind of doing some discovery in the beginning, really figuring out what they really need, what type of exposure they need, and then the products could be some type of block of securities that maybe they're trying to get access to, whether it's equities or if they're looking for, some type of credit facility, it'd be like some type of financing structure that you would offer. I mean, a firm like Blackstone, I'm assuming, is obviously looking for large credit facilities to kind of finance massive real estate or infrastructure or energy products, I'm assuming,
yeah,
right?
yeah,
Yeah.
exactly, exactly. And there will be multiple type of credit lines that we extend,
Hmm.
revolve RCLs, term loans on actual acquisitions or something. And
Hmm.
obviously just a lead fin team for their high yield stuff. So it was multiple product lines, multiple coverage and touch points, but it
Yeah.
would be my MD's, he would be the main throat to choke, for to say, on managing the overall firm relationship.
And then those would be mostly public facing products, not alternatives, right? I mean, our team actually posted a really interesting article recently on Task US. So I think Blackstone I think they did a $2 billion equity acquisition
Mm,
of Task US. I think it's like a call center. It's like a call support center. So obviously, when everyone's looking for like AI chips and chatbots, just kind of buying out a call center, it's pretty interesting. But were any of these opportunities more private markets or alternative opportunities, or I'm assuming on the trading desk, it's mostly public markets opportunities and structured products?
a lot of the structured products were actually for the private side teams.
Oh,
So
interesting. Okay.
private credit was a big one.
Hmm. Yeah.
Um, real assets, infrastructure, that was all private.
Hmm.
And then obviously private equity. There's
Yeah.
the standard LBOs, the standard high yield, mezzanine
Hmm.
financing, and all that. That's all
Yeah.
private. The public equity side, that they will be working mostly with like maybe our prime brokerage accounts.
Yeah.
So, and sometimes every once in a while we'll have like structure credits or structure lines going out to those
Hmm.
public equity arms. But
Yeah.
generally speaking, our global market, at least at BNP, the global markets team, most of their public equity clients would be the typical, hedge funds,
Yeah.
um, HFTs, stuff like that. Not the volume from the public equity arms of the private equity asset managers was
Hmm.
generally pretty small.
Yeah. Yeah. Because I mean, when it gets to public markets and you're buying like a block of securities, that's where you work with prime brokerage and you're working with like a portfolio manager to kind of close that deal, right? Because it's usually like a block of some securities, and that's where you deal with like sales and trading
Yeah,
essentially, right?
yeah.
Yeah. Got it. No, that's really helpful. And then what are some of those skills that helped you transit? I'm assuming definitely like the pitching process, right? Because when you get into venture capital, you have to pitch a deal and sell the partners. And as we know in venture, there's different types of decision making processes, right? There's the cowboy mentality where like there's one
Mm,
person
mhm.
that can just kind of have trigger pull abilities, whether they're at the principal level or at the GP level, where they actually have the ability to actually send over the term sheet and close a deal. And then there's kind of the whole investment committee consensus model as well. So like, do you feel some of the obviously this high stakes pitching to high stakes clients helped you in your investment committees? Yeah, and do you feel like you toned it down a little bit once you got to the venture side?
Yeah, for sure. Because when you were putting together pitch decks in
Hmm.
IB, it was information overload. It was how
Yeah.
much can we fit in on this one slide, and how much can we throw into the appendix.
Hmm. Yeah.
And there ultimately just isn't enough information to do that in
Hmm.
early stage venture. So at CI and both at Sweater, we are we are consensus driven. So we're very much so get the entire team on board, get buy-in from everyone, all the MDs or partners or whatever, so that this is something that the firm can put forward together as one face. Given our history, given our kind of quasi-state standing, we very much want to be perceived as one team, one dream.
Hmm.
So that kind of need and pre-socialization is very important here at CI, and that's a strong mentality kind of skill set I learned. That's definitely from time in IB, but also even from time in consulting, right?
Yeah.
Where knowing how to sell before it gets to the point where it needs to be sold
Hmm.
is
Yeah.
such a valuable skill set. It's a lot of kind of water cooler chats, a lot of
Hmm.
one-offs, a lot of looping them in early on, making sure they're CC'd and well aware of these kind of details before it even gets brought up in a more formal setting. I think that kind of idea of knowing how to pre-socialize and knowing how to get that buy-in early is extremely valuable in any career, regardless of what you do, honestly.
Yeah, no, absolutely. And when you have consensus based thinking, are there ways that you guys can narrow down a decision? Do you guys have matrices or kind of rubrics to kind of help grade or score? And there's so many, we have a lot of this within our, content. We've done a lot of research on this, but, what do you think has been working for you in terms of kind of maybe quantitatively and qualitatively assessing if you're going to actually write a check?
Yeah, yeah, great question. So for us, we do this thing called red team, green team, white team. So for every deal, once it gets to the IC,
Mm-hmm.
we split up the entire team to either red team, the green team, or the white team. So green team obviously are people that are approve of the deal. Red team
Yeah.
are people that disapprove of the deal, and people are randomly assigned. So you may be
Mm-hmm.
green, you may approve this, externally, but you may be all of a sudden be on the red team. And the white
Yeah.
team is a decision making team, and then deal team is separate. Like deal team doesn't get involved. So we make every deal go through this process where we have
Mm-hmm.
every we make the deal team present the case, and then we make red and green take what they liked or disliked about the case, write it down, and explain their own thoughts and reasoning behind it, and then we leave it for the white team to make a decision. To be frank, um, it's not a formal yes or no. A lot of
Mm-hmm.
times, white team, it's really a way for us to keep ourselves honest, on track, and
Mm-hmm.
to record. Because the most important thing in venture is recording and learning from your mistakes, not doing the mistakes, right? Because
Yeah.
if you do the process right, but still comes out with bad outcome, that's fine. Versus process wrong, bad outcome, right?
Mm-hmm.
So for us, it's a way for us to keep track of how the team and what people think, and then we do a formal documentation of this afterwards. So we literally write out, we make people submit a document that states what their forecasted return would be, what the IRR they think they should be, both on the base, downturn, and upside cases. And
Mm-hmm.
then there's like an explanation as to why they said what they said. And then there's we make people calculate the expected return based on the weighted average of those the three cases. So we do a lot of documentation right after deals are done, and then just make sure that when things go haywire or when things go really well, we can look back and do the whole memento memori, kind of review, be like, okay, what happened?
Yeah. What are some best practices for portfolio support? So some of the massive mega funds obviously have a whole team for portfolio support, right? They have an execution team, and then they have a whole team that kind of, follows up with all the companies, puts together investment updates. So, what have you seen in terms of the companies that are doing a good job with updates, and then how can we do a better job with portfolio support and obviously giving updates to stakeholders as well?
Yeah, so for us,
Hmm.
our portfolio support comes down in three big buckets: business development, recruiting and talent,
Hmm.
and non-dilutive grants. So we on business development, we say we bring the state to the cap table. So that there's
Hmm.
been a state, it's a documented in state legislature where our portfolio companies can bypass RFP processes to get right in front
Hmm.
of the principal investigator or stakeholder on projects initiated by state departments, Department of
Yeah.
Health, Department of Economic Development, etc.
Hmm.
So that's one big area we provide value in. The second one is talent. We have two full-time recruiters on staff. The entire
Hmm.
job is to place people at our portfolio companies. They did, I think, about 150 placements within the last fiscal year. So extremely good at what they do. They know everyone in and out of the state. I think they got our LinkedIn follower count from 34K when I
Hmm.
joined a year and a half ago, year and a few months ago, to like 86, 90K now. Very,
Yeah.
very good at what they do. And then the last one is non-dilutive grants. We have extra funding
Hmm.
allocated for executive in residence, for technical assistance, where we pay for legal, accounting, and financial advisory providers directly for our portfolio
Hmm.
companies. Um,
Yeah.
so there's unfortunately no tax breaks, but what we do try to make sure is help our companies grow in Connecticut over time.
Hmm. What are when you look at Connecticut, what are some of the macro things that you think are exciting about just kind of the growing ecosystem in Connecticut? I know there's a huge tech ecosystem there that's booming. What are some other higher level factors of just kind of the environment that's supporting the tech ecosystem?
Yeah, yeah. So Governor Lamont recently announced a $100 million initiative to put Connecticut as the most forward-thinking state on AI and quantum. So
Wow.
there's a dedicated carve-out within the state budget to
Hmm.
invest state resources into things that promote or touch the realms of AI and quantum. If you may not know, Yale and Yukon are great centers for this initiative. That's where
Hmm.
a lot of this partnership money is going to go towards.
Yeah.
We invested in a major quantum company called Quantum Circuits that was spun out by a Yale professor from the physics department, I believe.
Hmm.
I think Sequoia did their Series A. So, we ourselves as an institution are totally behind Governor Lamont's initiative. We
Yeah.
even carved out 50 million of our 500 million to be solely dedicated towards startups within AI and quantum. So
Hmm.
we're actively looking to invest in the space. We're actively looking to promote opportunities that can, like in the space that can grow in Connecticut. ASML, if you not know, has their largest R&D headquarters in North America in Connecticut, in
Hmm.
Wilton. Um,
Yeah.
so that's a big push for us. General other trends, Connecticut is the second wealthiest state in the nation, right behind Massachusetts, and that's only a recent change. We are highly educated. There is a lot of income disparity depending on the city and
Hmm.
counties in the state, but generally speaking, Connecticut is a very um, advanced state. It's a very good state. It's a great state to live in. There are a lot of resources and talent available for entrepreneurs that want to build in Connecticut.
Hmm.
Um, it's uh, I wouldn't even say it's up and coming anymore. It's been around for God knows how long, right? One of the first
Hmm.
13 states. Um, there's a lot of history in the states. There are a lot of great industries to build in the state. So besides AI and quantum, legacy industries like manufacturing. There's a corridor between Hartford and New Haven. It's called Aviation Alley. It's
Yeah.
Sikorsky helicopters. The first helicopters started in Connecticut. Now they're
Hmm.
owned by Lockheed. Electric Boat out of New London, where they built the first nuclear submarine, is in
Hmm.
Connecticut. Um, obviously financial services out of Stanford and Greenwich are really hot sectors. Synchrony Capital, the former GE headquarters, and people are still out here in Stanford. And obviously, insurance out Hartford. So there's
Hmm.
still strong industries located in Connecticut and available for entrepreneurs that want to get in touch and sell to these areas. And those are obviously industries that we have high touch points and a lot of availability to help on.
Yeah. That's amazing. What advice would you give to people after you've kind of gone through this, let's say, spiritual journey in terms of figuring out what they want to do with their career? I mean, you've pivoted essentially the same amount of times I have, right? So, what have you learned in terms of exploring different careers, and what has been your secret to making that pivot? I have mine, and I think for me, it's really just kind of knowing what I wanted to do, and then just trying to figure out the framework to make that change. But we'll love to hear your perspective on this, because it's very, very interesting background, how you've been able to kind of reinvent yourself a couple
Yeah,
times.
yeah, I think it's similar to yours, Joel, but there's this I mentioned this word before earlier, but it's ikigai, where it's like that Japanese concept. I'm going to butcher it, but it's
Hmm.
basically it's this intersection of four circles. Then one circle is what you are good at. Another circle
Hmm.
is what you can be paid for. Another circle is what you enjoy, and the last circle is like I think what brings value to society or something. And like
Yeah.
ikigai is the center of all these four
Hmm.
circles. And I was chasing that, I think, for most of my career. I didn't know what it looked like or what it meant.
Hmm.
I think I tried out all these different roles and industries because I
Yeah.
was so curious and because I was
Hmm.
so open. And ultimately, I realized that venture is a great fit for me because it is, especially here at CI, I'm finding that I'm basically a public servant in a public service job in a sense. I can be paid decently well for it. I enjoy what I do. Um, and I hope that this, does bring value to society in some way. So with that
Yeah.
said, you know, I think it can be blended and mixed in many different ways. But ultimately, I love venture because I'm always learning.
Hmm.
I'm especially being a generalist. I'm always learning about from people smarter than me. Um, never want to be the smartest person in the room. I rarely find myself as that individual, and that's what
Hmm.
I love. I love being surrounded by people smarter than me, teaching me things, being so passionate about whatever it is they're building. And I love helping those people, you know.
Sure.
These people say there's a lot of crossover between entrepreneurship and venture. And while I agree with that, I don't think I can ever be an entrepreneur because A, I'm not crazy enough. B, um, I've never found something that passionate like that, what I'm that passionate about. Ultimately, at the
Yeah.
end of the day, they just see the world so differently. And if I could just get a small glimpse of through their eyes of how they see that world, and I can help them achieve their vision and dream, that is so fulfilling.
Hmm.
And it's great that I'm being paid to do that.
Sure. That's amazing. Well, if you were to leave us with one final piece of advice, maybe something from one of your mentors, a family member, it doesn't have to be about professionalism, right? I mean, I think the ikigai thing is something that I'm familiar with, and it's something that I really truly believe in. So that was a good nugget. And then if you got anything else, maybe something from a big brother or big sister, a mentor, or just maybe kind of a life lesson from one of your past jobs, would love to add that to all the wisdom.
Yeah. I mean, I wish I had some nuggets off the top of my head, but I might have said them all in this, 45-minute long, however long conversation. But really, I think, um, whatever life nuggets I may have don't matter when it comes to people living out their own experiences and dreams.
Yeah.
Uh, but I will say this to entrepreneurs and founders. I had a founder recently email me what what would I care about as an investor when it comes
Hmm.
to whatever it is they're building. And I told the guy he's asking the wrong question. It doesn't matter what I care about. What you should think it matter and care about are what your customers want and need and what they would pay for.
Yeah.
I think sometimes founders get too caught up and overthink about investors when they should really be focused on customers.
Yeah. I
Um,
mean, that's the Bezos mentality, right? Obsess about your customers. And to just build off of what you said, I totally agree. I mean, I think what we think our peers think happiness is, whether it's like, living in Connecticut, having a second home,
yeah,
you may not care about that. And your happiness is like a different frame. And, I've mentioned this on past podcasts, and maybe some of my family might, yell at me for this, but I've got a couple family members that like live in like small rural cities, and they're just like the happiest they can be in their life. And like, there's been a few times where I've tried to like impose on them, like, oh man, why don't you move to New York? This is where everything is. And there's like, I don't care about that. I like hiking and I like nature, and New York doesn't have that to offer. And hey, like New York's kind of expensive. Like, are you crazy? So what you think your frame of happiness is, and I think maybe this is what you're trying to say, like that has no relation to like what the world thinks it's supposed to be, or who your peer group is. And maybe you need to change your peer group or switch it up a little bit to kind of find that.
yeah, much more eloquently said than whatever I had in my head. So thank
I'm
you
just
for
I'm just
summarizing it up.
I'm just finagling it as I go and hoping it sounds like it makes sense. So I'm figuring it out as I go, just like all of us, right?
Yeah,
So yeah.
exactly.
Awesome. Well, hey, Danny, thanks so much. Appreciate it. It was good to catch up and get to know you a little better. And all these nuggets of wisdom were really helpful. And I'll see you around.
Thank you so much. Yeah,
All
love to
right.
catch you next cocktail hour.
Yeah, absolutely. Catch up
All
soon.
right.
Bye.
Cheers. Bye.
Bye.